I put my lines where I put them. My lines for intraday charts relate to little bounce points and stuff we could have, but if you correlated those to daily charts, what you'll find is different opportunities to add and subtract in a trade. Now, the way I'm going to talk about this is going to be in pertaining to common stock trading, but I'll quickly show you how you can use it in options. But it's easier to understand if you don't have the secondary aspect of trading that options brings. What is our secondary aspect of trading for options? Time, right? Price is the primary object for trading, or primary aspect, but time becomes a very important and secondary aspect when it comes to trading options. So we're going to talk about how we could scale in and scale out. And I'm going to make the example here on a couple charts because not every chart is a good scalable chart. Now, I'm going to go through and you're going to see me mark lines on this chart, okay? And they're going to be lines, and you know what? To make it easy, we're going to go through this entire calendar year, starting with a gap up that happened in December. Okay, when we get a gap up in December, the first thing we got to look at is what if it doesn't fill the gap? You know, we can't let this happen while still focusing on this gap, can we? It is one thing to allow this to happen, but we can't allow this to happen while still waiting for it to fill the gap, can we? That just simply wouldn't be a good idea, I don't think. So when we see something gap up like this, typically we don't want to buy on the initial run. So what do we begin to look for? Pullbacks. Pullbacks that do what? On the gap up day, I put this line here. What's the important thing I need to look at? I mean, I can put another line at the gap fill, but do I need to be afraid to buy if it looks like it's doing something else? Well, you see, when you get this type of thing, you got this gap up and it begins to pull back. And all of a sudden you get a couple green candles off of it. What are you thinking? What are you thinking? Thinking it's going to move up. But here's how you should be thinking. It made a higher low, right? It made a higher low. So you mark it. Now, if I'm scaling into this trade, even a couple days into this, do I know that it's actually a higher low? I really don't know it's a higher low until it runs, right? Or until the next low is made. So here, when I see it kind of bounce a couple days, if I'm looking for charts with higher lows or simply are not making lower lows, how can I reduce my risk? Just talking about stock trading, how can I reduce my risk if I think that, hey, that made a higher low? There you go, Minnie. A partial buy, a small buy. You know, that small buy, if we're talking about stock trading, let's say you're trading $1,000 per position. I know some of you aren't doing that right now, but I know a lot of you are. Well, I can buy 500 here. A mini buy, there you go. A small buy. Because really, so long as it doesn't go below this low, it's still a higher low, right? It's still a higher low and still bullish so long as my last line is not breached. So I take a smaller buy because if it comes down and retests this low, wouldn't I just want to buy again? Now, as time progresses, I make a run, I pull back, and I start to get a couple green candles here. How can I judge if this is a pullback I want to add more to? Two ways. We bounce, we get that first green candle. What are we going to say right away? What's the first thing we're going to tell ourselves? It made a higher low. Okay, well, if that's a higher low, I'll mark it. And I can put more money into it. Now, after a couple days of confirming that it holds that low, when do I need to sell it? When do I need to sell my position? Well, the thing is once the low's confirmed, which you could also say would be if a higher high is made, then hey, I got a higher low off of a higher high, then I would need to sell when my confirmed low is broken, right? But if I bought here thinking this was the low and it ended up falling more, do I necessarily need to freak out and stop out? Well, remember, when we bought here, we bought small so that if it fell to this line, we could buy more, right? And as it confirmed, and we come back, we're buying small, adding to an average clear down here, aren't we? Yeah, I mean, you still have to say the trade's not bad until it makes a lower low, right? Regardless of what price you bought it at sometimes, and actually many times, you'd have to say that until it makes a lower low, I'm really not in danger. It could still be a bullish trade. Okay, right here, did it make a lower low? Now, if I bought half of it here, and I bought half of it here, am I looking to add any more? No. So here I'm in no danger. We make a run. We won't even talk about selling part of the position. We're going to talk really basic here. And then it pulls back, and a couple days later you say, I might have a new low, right? I might, but I don't really know yet. As a matter of fact, I don't know until it really confirms it with a higher high, thus making that the low, and this still is my danger point. Okay, so this could be a higher low, but we'll see because we've already double bottomed here, right? So this has now confirmed our low, hasn't it? Which means we no longer are thinking stop out, clear down here. We're thinking we've got a decent average because we bought some here and some here. So if it fails, excuse me, if it fails this line, we could still get out with probably a win. But I'll mark the low as it turns, and I make a higher high. Where does my stop become? Where do I stop? Clear down here, right? I made a higher high. This low becomes my stop. Now you might be saying, that's profits going bye-bye. Okay, sell here and never have a reason to buy back in. Right? Sell here and never have a reason to buy back in. Now, this really isn't a pullback. This is consolidation, right? But we start moving again. And we make a higher high, don't we? So even though it's consolidation, see these gaps? Even though it's consolidation, we started moving from it. So that's a new low, isn't it? Because a higher high was made. So where's our new stop at? The highest line. Now, so far from what I'm showing you, are you running the risk of not getting the highest sell? Are you running a risk of not getting the highest sell? Absolutely. But by taking that risk and trading uptrending stocks or stocks that you actually believe will do something, Rite Aid got beaten down, and right about this time, they appointed a new management, new CEO, and people got excited about it because even though their financials were still pretty bad, the plan was good. The new plan was something worth investing in. Okay? But you know what? There's a lot of things that have good stories and may be worth investing in that you don't just want to, if you just want to give them money and hold no matter what, just write them a check. Dear Rite Aid, so I don't lose money in your stock, here's money to help you grow. Go on iHub, you'll find several people that should have just wrote somebody a check. Okay? So, anyway, we use a tool like this knowing that it might mean we're not getting in or not going to sell at the top. But what else is it allowing us to do? Let's think of this. If instead of two $500 buys to get you in this, it was two $100 buys, what are you more concerned with? When you make a $100 buy in something, or a $250 buy, or a $500 buy, what's the first concern people ask me here when I tell them to buy one contract? or 2 contracts in options. Or I tell them to just spend $100 in a stock. What's the first thing that comes to mind? Broker fees. Think about it. When you buy and sell, do you not factor in your fees into your trade? Of course you do. Of course you do. Why do you? Because it's real money. If not, we would sell every stock every penny it moved, right? We would buy it, sell it, buy it, sell it, buy it, sell it, buy it, sell it, buy it, every penny, right? If there were no such thing as broker fees, we would literally buy and sell at every penny. And to think we wouldn't is kind of crazy. Wow, I bought 100 shares. It went up a penny. I made $1. I'm going to buy it again. 100 shares. They went up a penny. I made another $1. If I trade that 500 times in a day, how many dollars did I make? 500. But we've got to worry about fees, don't we? Especially people trading on smaller accounts. So if you're worried about your fees, what you can do is use a system like this, and we're going to go through this whole entire year, but let's look at it here. Okay, we made this higher high. Is this a pullback or is this consolidation? Consolidation. But what happened here? What happened here compared to here? Higher high, right? A higher high was made. So even though this wasn't a pullback, it's a low that produced a higher high, just like right here. So where's our stop now? Okay, now let's stop for a second. Who's got access to a calculator? I got to do all the work, don't I? Now, if I bought 500 shares on the confirmation day, on a close of or $500 worth, at the close of $1.37, 500 divided by 137. I took 364 shares, right? I need somebody to keep track of this for me. $364 shares at $1.37. Back here, when I got the second green day, and I spent another $500 at $1.57, $500 at 1.57, I took 318 shares at $1.57. Okay, so what's my average right now? Well, I take 364 plus 318, and we'll just divide it by the 1,000. Oops, that's not right. It'd be $1,000 divided by that. It's $1,000. Let me start my math over. 364 plus 318. I'm going to save that one. 1,000 divided by the memory recall, about $1.46 average, right? Do your fees matter right now? We're up here in the chart now. We just put in a higher high. Okay, you'd prefer not to be, but did your account go up 100% from January 2013 to July of 2013? I mean, just think of it that way. Did my account double from last January to last July? Okay? And if it, well, no. Not did this trade double. Did your actual trading account, Joshua, Joe, Howard, Todd, did your trading account double from January to July? So if the trade performed better than your account did, how is it not worth making? No, I'm asking you personally. You personally, did your account double from January to July? That's what I was asking there. And if it didn't, then how can you say a trade that did was not worth being in? If the trade outperformed your account, it's worth being in, right? That's the point I'm making. If the trade outperformed your account, then it was worth being in. Because you know what? If your account went to crap on other trades you made, you've still got some money, don't you? Now, let's look at this. We sell half here, and we've got these highs. And these highs were what based our sells, so I'm going to take them out. We know that our stop is a failure of this line. We're only sitting on half of our original position. Well, we get up here and we bounce and get a second green day. What's our average on the shares we're currently holding? $1.46, right? $1.46, $1.47. Is it worth buying in case it just made a higher low? Of course it is. Of course it is. So, you get a little bounce, you go green the next day, and we're going to look and say, now we just took $1,026.41 out of this. Do we want to put all of that back into the trade? What was our first buy's dollar amount? So shouldn't our second buy be the same dollar amount? So at this point in time, what did we do? What did we get? Think about it for a second. We're only putting 500 back into it. What do we have? More money to trade, right? So now, on this closing price of $298, we take our $500, divide that by $2.98, and we're buying 167 shares at 298. See, it's very easy to say, well, I got $1,000. I'm going to put that back in. But then you're actually taking the risk of squandering your profits, right? Aren't you taking the risk of squandering those profits? So at this point in time, I have 341 shares at $1.46, and I have 167 shares at $2.98. So I take 341 plus 167 equals 508 shares. I'll save that to the memory. $1,000 divided by the shares, and I have an average of 197, okay? So that was 341 plus 167 equals 508. 508 shares at $1.97. Everybody following me here? Where is my stop at this point in time? You know, I can put this line in here, marking this low, but where's actually my stop at? Here, right? I've got to stop right here. Until what? Until what happens? Is this a higher high than this? So once this high is made, that becomes my higher low, right? So I come here, I bounce, I move, and I make a higher high. There's my low that produced the high. And I come here and I fall, and then I'm doing my thing. I got a higher high. Where's my stop right now? We're over in here. Where's my stop? And let's not look at what the high is here of 375. Let's look at what the low is here of 335. I've got 508 shares. If I had to stop out right now, how much money do I have? $508 and a low of 335. I've still got $1,701. How much money do I have in this trade right now? Is that profit? If I got $1,000 in it, even if I stop out at this low, it'd still be profit, right? So is it still worth holding? So I come up here. Did I make a new high right here? You know, it's this low that produced the high. But look here now. I pulled back, and I actually, even on that wick, was a higher high. Now we come into time. This is earnings. Do I need to sell into the earnings right now? Is it that likely that even if I watch it after hours so I can trade it after hours, that I can't get out before my 197 average? Then this happens. What do I do? Come on, we're already up a ton. What do I do? How did I mark that first one? I put a line there, right? You mean to tell me you wanted to sell half right at the open? Come on. I put a line on that low. If it fails that low, I'll sell half. And this is before another pullback even happens. I've got a gap up. In my eyes, a gap up, the chart starts over unless the gap fills. Okay? So I put a line right here on my chart. That low now is 413. How much money do I have even if I stop out? I've got 508 shares times $4. Yeah. Okay, so here's one thing I want you to think about real quick. If I was trying to buy and sell on every single one of these highs, what's the likelihood that I mean, think about it. By the time this confirmed, if I sold on that high, I'm buying at the same price I sold at, aren't I? So all I did was give $10 to my broker. $10 in 4 or 5 days. Right? By the time I got the confirmation, I bought it at the same price I sold at. There's a reason I did it here because a lower high after a lower low. Had it made a higher low and then a lower high, I would have had to wait until a lower low. Then I would have sold half and seen if my next low below was broken. Fast forward to this point in time, if I stop out, I still have $2,098.04. How much money do I have in the trade? So do we want to sell just because it gapped up? The only time you want to sell just because it gapped up is if you bought it this day. Because you run the risk of if it does fill the gap, you lose money. We bought it here, here, and here. We don't have that risk of losing money. Unless you think of losing money as losing potential profits, and that's not how I think of losing money. I think of losing money as I started with 1,000, now I have less than 1,000. To me, that's what losing money means. I don't lose money until my $1,000 is $999. That's losing money. So now we get our gap. Is this a higher high? Oh, Todd, that's a whole different point I'm going to make in a moment. That's a higher high, obviously. So we're definitely holding this line. And we come back. Now, let's think of this. You just ran all of this way. On this day, are you really taking the opportunity to buy if you would have already sold out? Or are you saying this thing's pretty overextended? I can tell you you're going to say it's overextended because I sold here and I didn't rebuy there. And people in this chat room can verify that. I sold here and I didn't rebuy there because I thought it was up too much. But here you go. Here's a low. Is this a higher high? Here comes a low. Is this a higher high? Here's a low. Here's a high. Did we make a higher high before we pulled back? You know, this was a red day, but it wasn't really danger. This one was danger, wasn't it? Look at this right here. Was this a danger day? We pulled back We didn't make a higher high. See, over here, we actually put wicks down there that made a lower low. So we had to watch for a lower high. Did we make a lower low here? From here? Or even from there? No. So do we need to sell right here? Do we need to sell here, or do we need to sell if the low is broken? And actually it would have been like down here's low. So we're still in this. And now we even get a tighter low right here. It's up just a little bit more than that last line. We can take this out because we made a higher high, right? Now, at this point in time, today I speculated, because I was in it for this. I did buy here at $5, and we sold up here. Well, actually, it was down here because it was a trailing stop I had on it. I sold some on this red day, and then I put a trailing stop. So it sold one of these 2 days. I saw the broker alert, and I had the trailing stop alerted to adjust that. But right now, do I know that this is the low it's going to bounce off of? Do I know that for sure? Absolutely not. And I just put fresh money into it. But had I been holding from here, here, sold some there, and then bought back in here, what's my stop right now? It'd be this low of 504. How many shares do I have right now? 508. If I were to stop out today, I would have $2,560.32 plus the 526.41 left over from the last profit that I didn't put back into it. And is this greater or lesser than the amount of money I ever had in the trade at any one time? It's greater. As a matter of fact, how much greater? Well, let's subtract 1,000, because that's the most we ever had in it. And then let's divide this by 1,000 and multiply that times 100. Okay, so somebody who does not want to be in a trade for a year? Who wants to tell me that they cannot be in a trade for a year? And be honest. Be honest. Who doesn't think they can stay in a trade for a year? Now remember, this is just one that worked out like that worked out this big. You could have some that don't work out this big. Okay, John, let me ask you this, and since you're probably one of the only ones being honest, why would it be tough? Well, let me tell you the main reasons it'd be tough. A, most people here came from a chat service where they were taught day trading principles. That's reason number one, right? Okay. Reason number two is probably greed and impatience, right? You don't want to give up a penny of your profits. Okay. Do you see on this chart where if you'd have sold here, you'd be really pissed that it's all the way up here now? Okay. Now, let me say this as well. Did your account, ask yourself as an individual, did your account rise 208.673% in the past year? So why would this trade not be good enough? Think about it. The only reason it wouldn't have been good enough is because you wouldn't have allowed it to be good enough, right? So now you might see me alert buys and sells. Does that mean you have to buy it when I say buy it or sell it when I say sell it? I mean, did you enter a contract that said you promise to buy every alert I make and you promise to sell every alert I make? No. See, you could use the service to learn tools like this. Now, here's the third reason that you don't want to be in a trade this long. Because you put too much money into a trade and you think that money could make you more money somewhere else. Isn't that really the whole reason? It's not really because you've been taught all these weird day trading principles. It's not really because you've been wanting to be greedy about everything. It's because you're emotionally attached to that money. Dollars that I threw into something in January of 2012. Now, where I would have missed it is if I had to stop out of it, and now it's like just to sell it at the same price I bought it, it's a 20% loss with my broker fees, right? If we followed principles like this, and we were trading uptrending stocks and stocks that we believe would continue upwards, could we not turn $100 into $500 over the course of a year? Because let's face it, is every trade going to do this for an entire year? No. Okay, so we determined, real quick, that we have 508 shares right now with no reason to stop out. And our stop out is $5.04. Do we really need to watch this chart? Do we need to watch it every day? Like sit and stare at the chart every day? No, I mean at this point in time, we should have a stop entered at 503, right? Good till canceled, stop limit on quote, 503 with a $5 stop. And call it a day. But don't we want to, maybe at the end of the day, look and see if it did bounce and make a higher high to say that the new higher low is our stop? Don't we want to do that? Don't we want to see if it made a lower high following a lower low so that we can sell part of the position. But we don't need to focus on it all day, every day. So right now, we had an account, we had $1,000 sitting there, right? And you could transcribe this number to, even if it was $1,000 that you had total in your account and you put $100 in this one, well, instead of the extra zero on there, your $100 would be $256 right now. It's the same percentage gain, right? Okay, so you can translate this to any value of your account, but we do have 508 shares with a stop of $5.04. That's what we have right now, right? Well, that $500 has probably already been used in another position by now, right? We can still factor it in as the total profit in the trade, but it's probably already in something by now. I would hope so. So this is position one. Position one. I'm just going to pull up another chart, use the same type of strategy on it. Okay? You come back here. At the start, you get in December, it's like, man, those solars are really moving. And you're going to just mark this low. Oops, let me just take that one out, start over. Just mark the low. And you're watching. It breaks out of consolidation, right? And it is a higher high as soon as it broke out of consolidation. So that's a buy day. On some of these, Henry, watching would drive you nuts because you would never trade anything. How could I watch 65? Actually, right now I'm in 47 positions. How could I watch 47 positions and still look for new stuff? I'm only in like 7 or 8 shorter term positions. Yeah, make the wife and kids watch it all too. Hire 30 people to watch my stuff. But as soon as I make this higher high, or yeah, the higher high, this low becomes my validated stop, right? So even though if I'm watching it, I'm probably going to buy on the breakout, I'm going to use the closing price. Okay, $2.14. Same scale in type thing as before. $500 divided by $2.14. So I take 233 shares. Okay, so I've got 233 shares at 214. Now watch something here. It moves, it's consolidating again. And it breaks out of the consolidation. It actually did it right here. And it gave me a higher high. Well, I've got a new low. And, you know, even though it might seem like I'm chasing a little bit, I've got a good average, don't I? So I buy on this close at 247. So I take $500 divided by 247. And I'm going to take 202 shares at 247. What's my average right now? Well, I've roughly got $1,000 in it, and I've got 233 plus 202. That's 435. So 1,000 divided by 435 is a 220, I will say 230 average. where's my new stop? And actually, it'd be that low wick right there at 215. So really not even too bad of a risk. Not too awful, not too great. But let's think of something. We run, we pull back, we make a higher high. We pull back, do we make a higher high? We didn't make a higher high. Do we sell here? We didn't make a lower low. So we would sell half if we made a lower low, right? So we get going, it starts running again. Did we make a higher high? And you know, we've even got a pullback right here, don't we? It's consolidation, but it's consolidation that a higher high was made. So here on this day, this close right here, what are we doing? Sell half. Well, we have 233 plus 202 equals that divided by 2, 207. We're going to sell 218 shares. So how many shares do we have left? 217. Now, when we make this sale, the closing price is 298. So we're going to sell 218 shares at 298. And when we make this sell, we have $649.64 in cash, right? Now, if we're just going to base that off of $500 put in it, $500 put in it, we made $149.64, right? Well, then over here it fails again, doesn't it? It fails another line again. So at 269, we sell the other 217 shares. Oops. And we're at $583. $583.73. Okay, so $583.73 plus 649.6 is $1,233.37. Is that more money or less money than we started with? More? Well, you know, all of this happened. It failed this low. So we removed the line. Failed this low. So we removed the line. At this time when it bounces here, it failed that low too. At this time where it bounces here, do we buy or do we have to make either a higher high or a verified higher low? Meaning, would we have to like consolidate and then break out of it, just like we had to right here? Yeah, so we're not buying right here, are we? And then it fails. Comes down and it sits right on this line pretty much, right? Put a little wick below it. And then it jumps. Got your attention again, didn't it? But you didn't buy here. Where did you buy? Consolidating, 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 moving. Mark the low. And we'll even give the second day. Shoot, we'll even give the third day. With a close at 226. How much money are we going to buy it with? So we got 211 shares at 236. Now, we come up here, we jump, we pull back. Let me put our buys in here. Forgot to do that. I forgot to put our sells. I think it was there and there or something. Anyway, we come in here and we make this jump. Got a higher high. We're watching for a higher low. Crap, big day. We get this big day. And we're looking to do what? Buy, right? So your closing price is 244. So you take 500 bucks, you divide it by 244, and you got 204 shares at 244. Now notice, you weren't in this trade as long as you were RSH, right? Or RAD. You've already gotten all the way in and all the way out of this one. You come up and it's like, shoot, I bought here and now it's consolidating. Did it make a lower low? It might be less than what you bought it at some point, but did it make a lower low? No, so you're still in the trade, right? Well, as it starts moving, you get to now mark this, don't you? You now get to mark this. What did we do on this gap up? On the day of the gap up. Now granted, that we're missing the high. So what do we want to do when we confirm a lower high? Okay, so we come up, we're kind of bouncing around, going green, and you know, let's just kind of average this. We'll go halfway between these two lines, okay? 775, does that sound good for math? So we have, I gotta cough for a second. We have 207 plus 132 shares, 339 shares. $1,000 total in it divided by 339 is a 294 average. We take our 339 shares, we divide it by 2, and we're going to say 170. So we'll have 169 shares remaining. And we're going to sell 170 shares at 775. Is that more than 500? Now, with the next section of the trade, we don't need to stop out when this low is broken, do we? Because this low did not result in a higher high. But I want to leave this line here because we would need to stop out if it falls below this line. And I know that sounds like a lot of potential profit gone, but I want you to see something. You failed the line. You returned to it and confirmed what? Okay, so we're going to look at like 650. Because obviously here and then your close, what was your close there? 645. And we're going to take our other 169 shares times 650. Is that more than 500 bucks? You see, what you ended up with here, was you were actually, you weren't, it's not like Rite Aid, where you were in it for the entire year, at least with a portion, right? You actually traded this chart a few times. And you had 149.64 profit, plus 83.73, plus 223.84, plus 817, plus 598.50. This is just profit. This isn't even with that initial $1,000. So, trading this for almost the entire year, you added another 187.321%. Would it have really mattered if you were in this smaller? Small enough that you could allow it to trade properly? Would that matter? In my eyes, it wouldn't. You have to pick that comfortable amount that you can tell yourself, I don't care about this money for a year. How much money is that for you? How much money do you not care about that you could literally let sit in a trade as long as it takes? 5 years, 10 years, 20 years? How much money could you let sit in a trade as long as it takes? Anybody? How much money is that for you? Let me tell you this. It's not a full 10% of my account. It's not 10% of my account, or else I wouldn't be able to be in so many positions. Exactly. You know, something that you don't care about, that you could literally, listen, if I have to have this sitting in something for a year, it's only going to be sitting there if what? It's only going to be sitting there if what? If it's profitable. Because if it starts making lower lows, who's not in it anymore? This guy. Now, do you realize that we just went over this for two positions that on average were 200% profitable? They literally tripled the position size. Because you had 1,000, you ended up with 3,000. So basically, if you had 2,000, you put it in these two. Did your account do that? Did your account do that? Well, Faven, that's why we do this. is because the reward is better than the bank. The risk is worse than the bank, by the way. But here's the thing, and people tell me this all the time. People tell me this, I can't do the long-term trades. I can't do it. Why? Here's the funny thing. I have people with $20,000, $30,000 accounts telling me I can't do those types of trades. Then I ask them, okay, so you're day trading. Yeah, I like to day trade. How much money do you day trade with? Oh, I never have more than $5,000 put in anything at a time. And then they don't understand why I scratch my head. Do you understand why I scratch my head on a comment like that? Because they've got a $30,000 account and they're only using $5,000 at any given time. Wouldn't using the other $25,000 for stuff like this let them still play with $5,000 if that's all they're using anyway? If they're using $5,000 for their short-term trades, shouldn't they be doing something with the other $25,000? And I think they should. I really do think they should. Now, in this example here, did you notice how I always used like closing prices? Did everybody notice that closing prices, even though I personally, Mike, nearly every day, watching all of this stuff happen, but I used closing prices. So who here works for a living? Like actually has a job that they cannot watch these charts all day, every day? Okay, did I ever get the lowest buy or the highest sell in any of the examples I used? No. Were both examples profitable? Even though, I mean, look at this buy. I bought and it went down. But even if I would have stopped out, I didn't need to stop out just because it went down from my buy. I needed to stop out if it violated an area that I had marked, and it never did. The point I'm making is if you watch these all day, every day, guess what you should be using as your trading system? No. This, right? If you know that you can't sit here all day, every day, anytime I buy anything, my stop, I know where my stop is. Even if that means it drops below where I bought it. Trading does require patience. And think about this. Had you stopped out of this because you bought it at this closing price and it came back and retested 356, 355, whatever, and you stopped out, how would you feel about that trade right now? You mean to tell me I could have possibly had 877 and I stopped out with a loss at 356? That's how you would feel about this right now, right? It'd be hard for you to convince me that's not how you would feel. So even though the balance in your account day to day may go down a little bit, having a system that's healthy and productive allows you the opportunity to consistently make money, even if you're not sitting here all day, every day watching it. Now, I want to show you another type of scaling in system as I relate it to a lot of my option swing trades. And not just my option swing trades, but some of my trades I do. And here's the funny thing. You can correlate this with anything. I'm just going to pull up a chart. And I'm going to go with one that's consistent. Let me go with like JP Morgan. Okay? Now, if I'm trading JP Morgan and I'm looking to scale into an options trade or anything else, I'm going to first use an example of swing points. Okay? I showed you swing lows. And I'm going to run swing highs now. Okay, a swing high is going to be the high of a run, or resistance in some cases, right? Well, let's look at a period, and I'm going to run highs and lows. And I like to use closing prices. That's why I'm running it where I do, without the wicks. Okay, so I'm going to start with just a little bit, and what I'm going to look at is it's starting with entries down here, okay? Starting with entries over here. And though I might not catch the bottom, when I see a move, and if it's tolerable for me to stay within the swing high, I might take my first buy. Now, why would I be willing to take my first buy? Those of you guys that have been with me a while, what do I accept about my first buy? Yeah, that's the riskiest one, right? It's the riskiest one. So when I take my first buy here, and I get up and I break a swing high, do I want to buy more just because I broke the swing high? Or do I want to wait till I retest the line on my chart? Yeah, I want to wait till I retest. So a lot of times you see me selling half of something, right? So in this example, when I use a green arrow, this is going to be a buy based on thirds of a position. Thirds. And when I use a red arrow, it's always going to be based on half of my position. And to make the example easy, we're going to use 10 contracts as each third. That makes the math easy. I know in real life it won't always be that with the amount of money you're doing, but we're going to use 10 contracts to make the math easy. So right there on that day, I'm taking a risk. Hey, it might bounce here. How many contracts do I own? Okay. I break a swing high, and I begin to pull back. Contracts do I own? And I bounce off this swing high, and I make a positive move up. How many contracts do I own? And I get up into this swing high, and I make a big old wick right there. How many contracts do I own? We'll say 8. Makes the math easy, right? Easy to divide by 2. And then I break out. See, I pulled back under, but I break out again. How many contracts do I own? And I get up here, and I got a big old wick. How many contracts do I own? And at this point in time, I pull back some. I run again. Actually, I see a doji candle. How many contracts do I own? Every arrow is a sell half. So, 4 or 5. 4 or 5. I confirm it the next day. I get up here. I run up real nice the next day. By the time I get halfway through that day, how many contracts do I own? And on the next day's confirmation, how many contracts do I own? Well, when you get down to just like 2 and you're that far into the trade, don't you think you should probably just sell them? Now, I'm going to move this chart a little bit. And that was just an example of how you could do it with using swing points. Now, I could go over, let's say I use these moving averages during that same period of time. Okay, it broke our moving averages. How many contracts do I own? I'm always quick to take profits in the first part of the trade. It started to pull back. How many contracts do I own? It bounced off my 8 moving average. How many contracts do I own? I see a big wick. I get a little bit intimidated. How many contracts do I own? I see a doji. I get a little bit intimidated. How many contracts do I own? I see another big wick. I get intimidated. How many contracts do I own? Oh, I'll go down to 2 contracts. I will go down to 2 contracts. So I've got 2 contracts, right? I bounced off my 8 moving average. Again, how many contracts do I own? I see a doji. How many contracts do I own? Held my 8 moving average, but nothing special. I get up here, and the next day I pull back. How many contracts do I own? I confirm it the next day. I'm out. How many individual trades did I make there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. See, people want to be high frequency traders and try to find 10 different charts in that 2 weeks or 5 different charts. I made 10. I was high frequency trading there, wasn't I? I mean, I wasn't like super day trading, but that's pretty high frequency trading compared to the average Joe. It can be, and if I'm in the stock, if I'm in common shares, a doji doesn't scare me out. I wait for next day confirmation. If I'm in options, I'm battling price and what? Price and what? Yep. So you know what? At times it might end up looking like a bad decision. But if it kept going, the simple addition to time is going to compound the loss from what you had. Now, I also do this in a sense. If I'm using the moving averages, this is going to be another example to do once I make this other point. You can do this within your Fibonacci's as well, can't you? You know, if you break the 38.2 line, you buy some. If you go up and then you come back and retest it, you buy some more. You can scale in within your Fibonacci's as well. Remember, they're just lines on a chart. It's a visual aid for you. But I'm going to move this chart to where you really can't even see anything. Okay? Don't pay attention to any of this currently showing. Here's a line. Here's a line. A line. A line. A line. Now, we are going to say that when you are looking to buy, your price is here. Okay? So this is a buy on contracts. How many contracts am I holding? And by the way, I'm actually going to wait for it to do this first, right? It's got to do this. If it does that, what do I need to do? Sell it, right? Yeah, I'll sell 5. Now, what if it does this? No. If it did this, I'd be out. What does this? What if it does this? No. No, it didn't pull back. I mean, it blasted right through, didn't it? Am I buying any more here? I just broke through a line. That line was good enough to buy the last time. No, I didn't buy there. I would buy if it did this. Why? Well, typically when you break a resistance, you come back to retest it. And if you don't, you were chasing it by the time you bought it. And Henry's right, cheaper premiums too. You know what? As this was going up, the price of a contract here might have been $1, but here your common share price was the same. I probably spent 75, 80 cents. That's why I'll make my first buy on the way down sometimes, because I know it's my riskiest buy anyway. If I'm planning on getting 3 to 5 buys in every one of these, to be quite honest, I don't care if I lose 100% of my first buy. I really don't. So I made the bounce. What do I do here? Now, this is going to have you scratching your head. Why did I buy there and not there? I never got a full pullback. You see, when I run from support to resistance, I'm expecting some weakness even if it breaks above it, right? But here, I never fell to support, and I've got more strength for a run. I've got more strength for a run. But then I also have to do what if it doesn't make it all the way? So how many are we at right now? I don't know who's right, the 11 or the 16. Okay, so how many do I have left now? Let's say 6. If I sold half there, right? Now, the first time I bought here, it didn't work out for me, did it? I didn't all the way to resistance, did I? So I'm not going to make that mistake again. I learn from my mistakes. Ah, shoot, I should have bought that time. Oh well. What do I do? No, I've got 6 contracts left. I pulled back from resistance. Here's why. Hold on a second. I'm going to talk about that here in just a second. That's why I want to sell half, right? As soon as it pulls back. Now, if I get up into here, we're going to assume that these lines indicate my entire trade plan. So what would the top say? Target. Met. Target met. Now, we're going to add 2 simple rules to this. Rule number 1, no buys if within weeks of expiration. And if you really want to be on the safe side, and I know I don't always obey this, and this is trading days, not calendar days. Sell all within 7 to 8 expiration. What if I'm still running up? What if I'm still running up? Listen to me. If you want to trade these runs like they're a real stock and not an option, you're trading a month and a half to 2 months out, you're getting your buys here, your buys here. Oh shoot, I gotta sell some but I think it could still do something. Let me sell them all, and I'll buy them all on a month out. So I'm going to replace them here. I'm going to find an area to swap them out and push it out a month. If I still think it could run up, I'm going to find the time where I can swap them out. Now, I can't look at it and say, man, I'm really chasing on this new buy from where the bottom was. Because you're not chasing, are you? You're making a lateral move. Are you not? Are you not making a lateral move? Yeah. And yeah, the price of those contracts is going to be different, isn't it? You might sell these for $1 and an extra month or two out be $200 or, $2 or, 100 to 200. So what do? Buy half as many? You just take the money that you took out of it and roll it into the next set. So could you actually continue this as long as the trend lasts, even if that trend is years? I mean, even that trend lasts for years. You could do that same thing time and time again. And all you would do is wait for a time where, yeah, that would have been a half sell, but I'm getting really kind of close to that time. I'm going to sell them all, and on my next buy, I'm just going to jump straight into the next month. That gives me a couple more weeks, at least to trade this, or another month. And then, you know what? Here we go. Shoot, I only got 2 weeks. This is a time that I should be selling some. I'm going to sell them all, and on the next buy opportunity, I'll just buy out a month. Then you get to trade an option like it's a stock. Is that understandable? Or you could just start by trading out a year. It'll work on some of the cheapies. You're not going to trade Apple out that far. Yeah, you won't even trade some of our focus group trades out that far. But when you get to a sell opportunity, and you might be 3 weeks out from expiration, but if you're like, man, this thing really has a chance to keep going, and I don't want to miss it by having to sell too quick, so I'm going to swap these out right now. That's actually my intention today with Pandora, and I sold at what I thought was going to be a high, and it didn't pull back for me to re-enter the others. Oh well, but did I not do that same thing on Dow? Usually I would have held or did something else, but no, I sold all, and then I turned around and rolled it right into the next month. So real simple as far as explanation of the strategy I use in my scaling in and scaling out. Did the drawing make it make sense to you? Whether those lines be moving averages for you, swing highs, swing lows for you, Fibonacci retrace points, channel lines, did it make sense? And now, I know that not everybody can feasibly do this, and some people can. But, last night when I was talking to a few people, it really came to my attention that I needed to share, even as basic as it is for me to think of it like this, I needed to share that strategy with others. So others knew that that's how you trade options. So I did record